Okay, it's 10 a.m. Good morning, everyone. Welcome to the webinar on the scenarios for Latin America. My name is Brenda Lora, and I'm the Managing Director for America's Client Services at Tucker Frontier. We're coming to you today from Washington, D.C. and New York City. On the technology front, given the high volume of traffic all online platforms are currently experiencing, we do have a few backup plans. First, if you get dropped off the call, try to log back in. If that doesn't work because the platform has gone down, we will send email with alternative instructions to all of you, and we will get running up again within minutes. Lastly, we will also record this session, and we will be sharing the recording with you after the meeting is over. Now, before I get started, I realize some of you may be potentially new to Tucker Frontier, so I thought I would spend 2 minutes providing you an overview of our firm and how we work with executives at major multinationals. Tucker Frontier is a market intelligence and consultant firm. We provide tailored solutions to drive growth for clients across the B2B, healthcare, consumer, and technology sectors. Our dedicated teams serve as advisors to clients, delivering the market and industry knowledge they need to succeed at all points of the business cycle. Continuous research and insight, custom solutions, and transaction support services provide clients with timely, actionable insights to adapt and win in changing markets. The company is headquartered in Washington, D.C., with offices in Troy, Michigan, New York, London, Paris, Berlin, Singapore, Shanghai, and Bangalore. For more information, please visit www.tuckerfrontier.com. So with that brief overview, it's my pleasure to introduce you to our presenter, Pablo Gonzalez. Pablo Gonzalez is our Managing Director for Latin America Research, and he wrote the scenarios for Latin America. Pablo?
Hello, Brenda. It's a pleasure to be with all of our clients, and I'm with you here on the line. How you doing?
Very good. Thank you so much. So let's get started. To touch on the structure of our teleconference, it will consist of a 45-minute moderated discussion followed by Q&A. If you have questions or points of clarification regarding any of the topics that we will cover today, please send them to us via the Q&A box on the right-hand side of your screen. I will do my best to ensure that all of the questions are addressed during the Q&A period. So Pablo, thanks for the time today. We know that the economic context, and not just in LATAM, has gotten much worse since the year started. But before we get into our COVID-19 analysis, can you please provide us with a bit more context on how multinationals were thinking about 2020 before the outbreak happened?
Yeah, that's a great question, Brendan. I think it's quite unfortunate, not just for every country in the world, but especially in LATAM from a human perspective, obviously, but from a business perspective. If you think about where companies were prior to the outbreak, they were setting higher targets for 2020. But as you can see here, not much higher targets, right? They were not super bullish about 2020. If you look at the chart on the left, very few companies reported much higher targets back in February at an event in Sao Paulo with regional executives, and also very few were super confident or very confident that they would hit those targets, right? So overall, they were confident, but not super confident. And I think you can justify this when you look at LATAM's trajectory over the last few years. So as we all know, LATAM has struggled to settle into a new normal, and everybody thought that that new normal would be at around 2 and 3%. And if you look at the last 3 years, we've been growing at very weak growth rates here, as you can see, right? And the number, by the way, the 1.4 here, this is prior to the COVID outbreak. Then the other reason I think our clients are not setting much higher targets, or we're not setting much higher targets, is because of all the constant revisions that LATAM has been through over the years, and also in 2019, where you see here on this chart the forecast that we had at the beginning of 2019 for 2019, and the revisions that were made throughout the year. And it's important to note here that some of the revisions stem from a worse than expected external environment, especially if you look at export growth, but most of this was self-inflicted, right? If you think about political uncertainty in Argentina, regulatory uncertainty in Mexico, social unrest in Chile, the delay of the pension reform in Brazil, Vizcarra's almost stepping down in Peru, and actually the only country in LATAM where we made upward forecast revisions was Colombia, but as we'll see, Colombia will also suffer from COVID-19. And we can tie this to business performance last year, where you see some clients or more clients than not outperforming targets in Brazil, despite lower growth in Brazil. The same happened in Colombia, Central America, and Peru. But you see here big disappointments in Mexico, Argentina, and Chile, where more clients than not missed their 2019 targets. So again, 2020 was a year where most companies, and this happens every year in Latam over the last 3 years, we're hoping that things will get better. And that's what we're hoping to, right? If you look at our view for 2020, prior to COVID-19, you look at the factors we normally track for Latam. We're expecting global trade to pick up, sort of a mild rebound in 2020, commodity prices to stay low, remittances and tourism to remain strong but slowing on the back of ongoing US economic growth and a tight labor market in the US, relaxed financial conditions, and still high regulatory uncertainty, right? So not much better, but definitely better. But this is how our outlook has changed since the COVID-19 outbreak, right? So you see a completely different outlook here with most things in red, trade contracting, lower commodity prices, remittances and tourism contracting, a different type of political and regulatory uncertainty, as we'll see. And the only upside right now is the monetary stimulus that we're seeing in the US that will have ripple effects across the region. So actually, I just wanted to pause here, Brendan. I think it's a great time to ask our own clients and people on the line as to how much they think the outbreak will impact their revenues against original targets. And what I'll ask people to do, if you look at the screen, you can type this URL on your cell phone, and it will prompt the polling here. The first thing that you have to do is to put your name or your company's name. We treat all answers in an anonymous way, so don't worry about that at all. And we will be sharing the presentation with our clients after the call. So I'm just going to wait for a couple of minutes so people can, type this address here and start taking the question, and then we'll comment the answers very quickly.
Excellent.
So just waiting for the people to continue to take the answers. I'll wait probably one more minute. So as you can see here, very significant hit. Answers between 6 and 20%. There's a few clients that report no impact to their top line or actually growth. And it's important to remember, right? Not all industries will get impacted. There are certain industries, as we know, that are going to benefit from this, at least from a commercial and financial standpoint. That informs some opportunities for certain of the clients here. So I'm just going to move on. I think we have enough questions or answers here. But if I move into the next question, I don't know, Brenda, if there's any comment.
No, please go ahead, Pablo.
Okay. Yeah, so we're also getting a lot of questions from our clients as to how planning activities have changed. And I'm assuming that everybody's in firefighting mode, but I think it would be interesting to get a sense as to, whether strat planning activities have been put on hold, delayed, whether you're meeting for your business review meetings more frequently or less frequently. What's your planning horizon? Are you trying to forecast only the next few months of commercial and financial performance? What are you discussing? Only short-term things? And actually, are you reserving space to continue to talk about strategic assumptions or changes after the outbreak? And here you can select all that apply. So definitely more frequency. I'm glad to see also that significant portion of respondents are reserving space for strategic questions, right, about the outbreak. This is not just about managing the crisis, but also preparing for the upside and preparing for the business for structural changes. So I'm just gonna give exactly 15, 20 more seconds for people to respond, and then we move on.
Great, Pablo. And I think there has been a complete shift in market conditions for our clients. So there's implications for the short, medium, and long run. And although we can also see that some sectors are going to benefit from this, I think what our clients would like to understand is, what are we hearing from other multinationals? How are they dealing with the crisis at the moment?
Yeah.
And I think that's going to be very revealing for us.
So I'm definitely going to be talking about our economic scenarios and for this year and next year. But to your question, Brent, I think companies have had to completely revisit and reprioritize in the short run. And I think the things that they're doing, you can see them here on this table, but first and foremost, protecting employees, ensuring that local subsidiaries are complying with local healthcare guidelines, ensuring business continuity, we hear this a lot, managing supply chain disruptions, open and continuous communication, also very important, keeping morale and productivity high. I think the medium term, I'm not going to read out all of them, but I think it's about forecasting when the market will rebound and preparing for that upside. And over the long term, we need to understand how the market will change and reset our strategy and key initiatives to really capture market opportunity in a new reality. But if I look at this list, probably the one that our clients are focusing on the most right now is protecting cash. And this is because protecting cash will be key to ensure business continuity, and not just that, even the survival of the business throughout the crisis. And these are some things that we're hearing from our clients. So from a P&L standpoint, it's all about bringing revenues in earlier than normal through price discounts, pushing products to e-commerce or services that you were rendering in person online, reducing or controlling OPEC as much as you can, restructuring loans with banks to delay payments. In terms of CapEx, it's almost about freezing every single CapEx or renegotiation contracts. And in terms of working capital, is the same, right? Trying to delay payments and bring in receivables in sooner, right? So these are the things that companies are doing. In some countries, we already see governments putting in place stimulus measures for companies to stay liquid. So we also encourage our clients to look into those stimulus measures and see how they can benefit from them. So I'm going to ask one more question, and then I will not ask many more questions for a while. But if you think about ways to protect your cash, if you had to choose one, what is your company focusing on right now? Yeah, so not surprisingly, reducing OPEX. I guess this is the line in the P&L that companies have most control over. Obviously trying to mitigate impact on top line. And there's a significant amount of clients trying to do everything, right? I think it's hard to prioritize in war times as this one, somebody would say. You really need to do or be doing most of the things on this list. So just for the sake of time, I'm just going to move on and talk about the outlook that we have for 2019. Because I think we all know what we need to do in the short run, but we need to be ready to protect the business right now, but also tap into the upside when markets recover. And the first thing that I wanted to do here is to show you how our forecasts have changed in LATAM for 2020 and for 2001 since January. And you see here in March, there were 2 rounds of revisions. We normally forecast every month. At Darker Frontier, since COVID-19, we've been doing weekly forecast revisions to stay on top of market developments. And you see here the progression between 1.4 in LATAM to a recession of 2.5. But you see a rebound of 3.3 for 2021. And if you compare the blue and the red bars across countries, you'll see that we'll put every country in LATAM in recession for 2020 and very deep recessions in some cases, like in Brazil or Argentina that was already in a bad shape. And even in tier 2 markets, we've sent most of them to recessions in 2020 with rebounds in 2021, right? So it's important to understand that we're gonna be going through rough times, but we're not forecasting a prolonged contraction or depression over the next few years. It should be a rebound in 2021. Actually, the rebound, as we'll see later, will start already this year. But before we talk about quarterly growth forecast, I think it's important to understand that even though in 2020 we're going to recover the lost ground of 2000, and so even in 2021 we'll recover all the lost ground in 2020, but we're going to be settling into a lower growth trajectory or lower economic activity, as you see here right on this chart, right? So the lines are showing levels in constant GDP, and this is for Brazil. As an example, this was our previous forecast or economic growth projection, and this is our new forecast. So you see how Brazil rebounds already in 2021, already recovering the level that it had at the end of 2019, but it's not going back to the blue line. And the reason why we think we're not going to recover all the economic activity that we were forecasting is because there's going to be structural changes or lasting damage to the economies, right? So right now it's inevitable that some companies will go bankrupt, and that's going to lower structural investment down the line. Even if the rebound is quickly, some companies might not rehire everybody that they let go. And also there's going to be higher structural unemployment as people change consumer behavior throughout the crisis and stay not very confident or worried about their own personal prospects down the line. And this will happen as well, by the way, with companies. So you just have lower confidence levels across the economy. Number 4 is important because, as you'll see, most governments will deploy very aggressive stimulus measures, but that will damage their financial standing. And at some point that might buy those countries down the line in terms of fiscal imbalances, right? So they're not gonna be able to spend as much money down the line as before. And you also need to think about all these 4 factors will happen to some degree in China, the US, and Europe. So we're also not expecting the same type of export growth trajectory that we had prior to the COVID-19 crisis. And to continue in terms of quarterly growth forecasts, we don't have them for LATAM yet. So here what I'm showing you is the trajectory that we expect for the US in our base case for 2020. And you see here a super big contraction in 2020 in Q2. recovery in Q3, but as you see here, it's not a V-shaped recovery. It's actually moderate recovery, just comparing, by how much the US economy will contract. And then we stabilize in 2020. So I don't think LATAM will look very differently from the US. So you should expect sales to start to pick up in Q3 and continue to pick up in Q4. But it's not going to be a V-shape. It's not going to be a very strong rebound because of all the collateral damage that I was alluding to. So I just wanted to pause here again and ask you, when do you expect your sales to start to pick up? Do you think it's going to happen already in Q2? So say between now and June, is it going to happen in Q3, in Q4, not until 2021 or rather? Okay, so Q3 the majority, then Q4 and 14% not until 2021. So to be honest with you, things will change and things are changing by the day. So we just need to do closer monitoring, for all the signposts in terms of stimulus measures, especially in the US, China and Europe, and then as we'll see how the outbreak spreads in LATAM. But I'm going to be talking about that a bit later. So to that point, right? So you might be asking yourselves, how did we come up with our forecast revisions? And the way Daker Frontier has been monitoring this crisis is by trying to have answers to these questions here, right? So there's 4 factors that we're monitoring right now. So the first one is external demand. So to what extent will exports and tourism decline because of lower economic activity in China, the US, and Europe, and how quickly will they recover? By how much will export prices fall and then recover? Secondly, how quickly will Chinese factories be at pre-virus capacity, and whether you see supply chain disruptions in the US and Europe as well, and this will impact the extent of supply chain disruptions in LATAM. And then from an internal standpoint, we need to understand how are different countries containing the virus, what type of social distancing measures they will be implementing, and also what will be the death toll at the end of the crisis. And I'll explain as to why we care about not this just from a human perspective, but even from an economic perspective. And then the policy response, right? To what extent will governments have the willingness and capacity to maintain social distancing measures and to fight the virus from a healthcare perspective? So I'm gonna go through each of these 4 buckets, but before I do, I just wanted to give you our base case for each of them. And if you think about external demand, as I told you, expect exports and tourism to heavily contract in 2020 and recover only moderately in 2021. China is expected to be back online by Q2 in terms of their factories, and we're already seeing some disruption in terms of factories interrupting production in Europe. A few companies in the US, although it has not been mandated nationally yet or by any state, but this could change. And then from an internal standpoint, we've seen a bold action in certain countries in LATAM, as we'll see. But within that, LATAM will not succeed at containing the virus, at least at the speed that Southeast Asian countries did, because they lack the resources, the technology, or the know-how to bring it under control, right? And this is not to say that LATAM is going to contain the virus worse than Europe or the US, probably in a similar capacity in some cases. And finally, the policy response within that countries will spend beyond their means, even if they don't have the fiscal capacity to contain the outbreak. And as we'll see here, there's going to be different approaches and different capacity on the part of different governments to do this. internal factors, you must be also wondering how they're going to impact our view for LATAM. And I think it's important to understand that this will come, these are second priority right now for most governments and for citizens in LATAM, but nonetheless, they will be shaped by COVID-19, right? So most of the reforms that countries were discussing will probably get deprioritized or pushed down the line. That could happen also with election and key votes. And interestingly enough, the social unrest that we saw last year, it's likely to appease because people avoid social gatherings, right? But we're not discarding, and this might come back down the line for several reasons. So I'm going to be talking about some of these when we get to specific countries, but just to note here that the social factors or the domestic factors that we were monitoring will get highly impacted by this. So going back to the four buckets, I wanted to start talking about the external environment. I think it's important to understand that already in 2019, we saw export growth contract globally and also in LATAM since May of 2019. And this was because of lower industrial production in China, as Chinese factories were trying to clear inventories because demand was not as high as expected. That's spread into Europe and the US. We were expecting inventories to clear in H2, but that's not longer the case, right? And if you look at the forecast revisions we've done to China, the US, and Europe, right now the base case is that exports will contract even at a higher pace that they did in 2019. And just to bring your attention to the forecast revisions, we were at 5.9 for China. We've revised our forecast down to 2.6 for 2020, although we see a rebound in 2021. In the US, we're forecasting a recession now, down from 2.1, and only moderate recovery in 2021. And in Europe, we're also forecasting a recession in 2020, and we're revising our 2020 numbers as we speak, right? So if you look at these numbers, there's really no way that export growth can continue. On the contrary, and the same will happen with tourism flows and remittances, also very importantly for Mexico, Central America, and the Caribbean. And when you think about exports, it's not just about the volume of exports, but really the price of those exports. This is really what impacts the export bill, and also, by the way, governments' coffers and their ability to stimulate the economy and so forward. And what you see here is a commodity price index, the CRB index, and the big drop that we've seen since January. You can see that on the right, where commodity prices have fallen by an average of 31%. And then you compound this with the OPEC plus quota agreement failure and between Saudi Arabia and Russia, and that has made oil prices plummet even more, right? So definitely a double whammy there for export growth and for commodities. And this is unlikely to change or get much better throughout the year. Just going to skip this slide for the sake of time, but the second bucket that I was telling you about is the extent to which we see supply chain disruptions in LATAM. And what this map is showing from Bloomberg is what is the level of dependence on Chinese production to get products into your market, either final goods or for your own production purposes, right? And you see how integrated the US economy is with China, but you see also high levels of integration between LATAM and China. And this is just looking at industrial production halts in China, not even trying to calculate what would happen if Europe or the US had to close factories to the degree that we saw in the Hubei province, right? This is unlikely to get worse as we progress. So that's from an external standpoint. And then from an internal standpoint, and this is a thing where you see more variance across Latin American markets. And the first thing, if you think about 10 days ago, we were looking at some cases in LATAM, and some people were wondering whether LATAM could escape from this. But if you look at this map from Johns Hopkins, this is really already a global pandemic. and LATAM will not escape from it. And if you look at the progression of cases, and this is just looking at the last 10 days, since I started to tally confirmed cases in LATAM, they have grown exponentially in LATAM, especially in Brazil. If you look at the number of cases as of yesterday in LATAM, it has grown by a factor of 17 in the last 10 days. So if I look at this, it doesn't seem that LATAM will follow a much different trajectory than what we've seen in other countries, especially in Europe. It remains to be seen as to whether the curve will be as steep as in Italy or Spain, because markets reacted quicker in LATAM, but there's other problems that I will allude to as to how different LATAM markets might be able to contain the virus in the short run. So this is where we are right now. And this brings me to, I guess, the key factor, right, to really understand our scenarios for the future. And I know that some of you or many of you are reading a lot of different analysis by different people as to what the different containment measures are. And what's very important to understand is that different containment measures come at different costs. And there's actually a trade-off between your country's economic trajectory and the number of people that die. And as we say here in the title, whether countries or governments are fully aware of their consequences or not. I'm just going to walk you through different approaches. And if some of you read this amazing analysis by Tomás Puello, Coronavirus, the Hammer and the Dance, I really encourage you to read that one. I'm having the link here. But in this article, there are three approaches that are identified, right? So we have the do nothing approach, or herd immunity. And here what you do is, you know what, I don't want to do any social distancing. I don't want to impose any lockdowns, quarantines. I don't want businesses to close because the damage would be higher to the economy and in terms of job losses. And that might lead to worse outcomes, even health outcomes down the road. Right, so you're prioritizing economic growth. But the problem with that, and you'll see why in a minute, is that the death toll would be rising, too quickly, right? And you will get to a death toll that could actually detract growth in the future. If you lose, say, 3% of your potential consumers, let alone the human cost, the morality of these measures, and the social unrest that they could ensue, right? So this is something that the UK was trying to do. They had to revert, correct course. The Netherlands has been trying to do this. We see some countries in LATAM, like Mexico and Brazil, a little bit in denial, at least their presidents. And this is something, again, that we don't recommend that countries do. On the other side of the spectrum, you have what we call early and effective containment. So this is the hammer, where, and this is what South Korea did, Singapore, China, where they do social distancing, including quarantines really early on. They build healthcare capacity, big stimulus measures to contain the virus and the quarantines. But something that they did that almost no other country has been able to do properly is massive testing, contact tracing. So this is removing people that were suspected or that are suspected to have the virus, just take them out of circulation and you put them in hotels. Something they've done, quarantining, and then isolating populations at risk, especially the elderly, right? So this is what good looks like. And here, if you look at the death trajectory, you're gonna get fewer people dying and containing the outbreak much quicker. You're probably gonna get a deeper dip in your short run economic growth, at least in Q2. But then you can go back to normal quicker and you can actually go back to the previous growth trajectory. This is what we're expecting in places like China, again, or South Korea or Taiwan. And these are base case right now for most countries in LATAM, for the US and Europe, where you have late or insufficient containment, in which you're reacting either too late. And when you do, even if you're doing quarantine, even if you have the healthcare capacity, hospital beds, even if you stimulate the economy, you're just not being as effective as Southeast Asian countries. It just takes longer for you to contain the virus, more people die. You still see the economy dropping because of the quarantine measures, but then the new normal is a lower growth trajectory for 2021 and onwards, as we saw on the Brazil example. And just for you guys to see how this might look like for a country like Mexico, and again, Mexico's president has been in denial as to whether the country shouldn't stop business as usual. And here I'm using this amazing tool called the epidemic calculator, where you can actually model how many people could die in the do nothing scenario. And this is an extreme scenario because it assumes that no local governments in Mexico or no Mexicans are taking matters into their own hands. So people continue with their lives as normal. And this type of scenario, you could get 4 million people dying in Mexico. That's 3.3% of the population. You might be asking yourselves why, and the reality is that COVID-19 is not much deadlier than other viruses, but it has a longer incubation period. It's more asymptomatic in most cases, which means that the probability of contagion and how quickly the virus can spread is just much larger. And what that does is that even if you get 10% of severe cases, they're going to be flooding hospitals, right? So that the risk is not, again, how bad the virus is. The risk is not having enough beds, not having enough ventilators for those severe cases, and that brings up the mortality rate. So again, this is a super extreme scenario, very unlikely. And this is the best case scenario for Mexico, in which you adopt Asia-style measures, and in this case, only 3,000 people would die. So I know it sounds quite dystopian, but it's unlikely, but it could definitely happen. And just to show you another chart here, here you look at the curves in different countries. And you see the steep of those curves being much higher in Europe, even the US already, and much flatter in Hong Kong, Singapore, Japan, South Korea. And this is a good testament of all the measures that they implemented beyond quarantines, testing, tracing, isolation, etc., etc. And this is what LATAM countries have done so far. So we put together this chart looking at social distancing measures, thinking about or looking at whether these are mandated nationally by local governments, and how many of local governments, how many states are doing it, or provinces or cities, or whether this is just a recommendation by the national government, or whether nothing is being done. And what strikes me here is I would say, negligence in Brazil and Mexico at containing the virus. In many cases, just a few states doing it, total decentralization to states, very few things mandated at the national level, and both presidents still telling people that businesses don't need to close. So this is concerning for Brazil and Mexico. And you see a completely different scenario in places like Colombia, Argentina, Chile, and Peru, which have taken much stronger action since the beginning, with national quarantines already in Colombia, Argentina, and Peru, with travel restrictions, etc., etc. However, as I told you, even in places like Mexico, some states like the city of Mexico, and even citizens before those social distancing measures were mandated, they seem to be taking matters into their own hands, right? So a nice way to look at this is traffic over the last week. So this is the red line compared against the same week a year ago. And this is Mexico here. You can see here already much less congested, traffic in Mexico City. The same goes for Sao Paulo, right? So this is why the do nothing scenario is so unlikely, because even if national governments don't do anything about it, local governments and citizens will. And then the other factor I want you to take into account for LATAM is that in order for you to maintain social distancing, or actually, let me put it the other way around. If your healthcare infrastructure is not prepared to handle the virus, if you don't have enough hospital beds, nurses, ventilators, then there's a higher or stronger impetus for you to flatten the curve and to rely more on social distancing if you want your healthcare system not to collapse. And here we see different degrees or varying degrees of readiness in terms of healthcare. Readiness, you see here hospital beds per 1,000 people. The WHO recommendation is 5 beds per 1,000 people, and only Argentina gets close to that number, and most countries are between 1 and 2.5 beds per 1,000 people. And the same happens with nurses, where Brazil, Argentina, and Mexico happen to have more nurses than in other countries, but still below the WHO recommendation. So this on the bad side for LATAM. On the positive side is the fact that LATAM has a younger population pyramid than, say, Italy, where the average age right now in Italy is over 40 years old. So you have much younger populations and less vulnerable to the outbreak, or at least the likelihood that you have severe cases per capita is lower in LATAM than it is in Italy, with a much older population. But again, this is the healthcare aspect. It's a bit concerning. And then the other thing is, if LATAM needs to contain the quarantine for longer, it needs stimulus plans, right, to mitigate the impact on the economy, right? If you want people not to go to work, if you want businesses not to operate, you're gonna have to sustain their liquidity. And the longer you have a quarantine, the more money you need to put in. And what's concerning for LATAM is that only a few countries have investment grade right now, which means that the fiscal capacity to sustain a quarantine for long is just not there. But when you look at what different countries are doing, funnily enough, if you look at Brazil and Colombia, looking at the different stimulus measures, either to protect jobs, to protect people's liquidity, companies' liquidity, these are the two countries that are taking bolder action, even though they don't have the money to do it. And I think this is an important silver lining, because I think what's going to happen is that most countries will spend money beyond their means. If they have to print money, they will probably print money, as the US is doing, just to contain the virus. But it opens big questions as to the financial stability of Latin America in 2021 and 2022. The other thing that I would say here is Mexico is not doing anything. And this is also very concerning for Mexico. And the other thing here that strikes me is that Chile and Peru are the two countries that have the highest capacity, fiscally speaking, and they could do more. And if I had to talk to policymakers in these two countries, I would encourage them to put together stronger stimulus, because they can. And finally, the other factor that we're monitoring from a stimulus standpoint is monetary stimulus. What we know right now is that the Fed has put in place the most aggressive monetary stimulus in history. Interest rates are now at 0%. And for LATAM, what this means is that central banks in LATAM should be able to also lower rates and stimulate credit in the economy, or at least ease some of the debt servicing costs for people that have mortgages or outstanding loans. And if you look at inflation rates in LATAM, at least in February, as of February, they were still below 4%, which means that inflation should not be a problem for LATAM as they try to lower rates. However, if you look at by how much currencies have depreciated since January, you've seen massive depreciation in LATAM. So what my concern right now is whether inflation is going to pick up to a point in which governments, or central banks rather, in Latin America might not be able to lower rates as much. And we're going to be getting those numbers in April, so we have better answers for that. And then the other is, how effective would monetary stimulus be, right? Who's going to be willing to take on credit to buy durable goods? Which company is going to be willing to take on credit to make new investments in the current scenario, right? So I think the effectiveness of monetary policy is just going to be hindered by the current situation. So just wanted to pause here. We're going to be moving into the scenarios for LATAM in a minute. I don't know if Brenda, you had any comment.
Thank you so much, Pablo. No, I share your same concerns, and I think our clients are going to have to deal with unprecedented levels of uncertainty. So the question I had is really around, if there's any domestic factors that could make any country better prepared or worst across LATAM. So I think you're going to touch on this subject now.
Yeah. So yeah, that's a great question. There's going to be country differences. But the first thing that I would say is until now, I've just given you our base case for LATAM, but there are alternative scenarios. And for you, for the clients on the line that saw our presentation last week, what you will notice is our thinking has evolved over the last few days. Because last week we were already trying to measure the extent to which social distancing measures, full national quarantines would impact growth in 2020. But I think there's no way to look at this crisis if you don't look also at 2021 and the trade-offs that you're making, right? And again, it's not just about economic growth and debts, it's also about economic growth now and economic growth later. So this is a little bit of a complicated chart, but here you have on the y-axis the different containment strategies or approaches that we already talked about. So early and effective, Asia style, later or insufficient, do nothing. And the same goes for China, the US, and Europe. And how China, US, and Europe contain the outbreak will inform the extent to which you see export growth recovering, at what pace, also remittances, tourism, etc., etc. The base case right now is that both, at least US, Europe, and Latin America will be in late containment. China might be in early and effective containment, but if I just look at the weighted average of, these measures, I would say, if I look at those three together, I would say late containment. And these are the scenarios that we've talked about, but there's actually two alternative scenarios or two scenarios that are likely, not as likely as the base case, but still likely, that could bring some upside to the region. So the first one, the first thing that I wanted to say is that I want to give LATAM the benefit of the doubt, because they did take strong action, especially in Chile, Peru, Colombia, Argentina, and that might work for them. And we're not experts in epidemics here at Aker Frontier, so we need to account for such a scenario in which they can flatten the curve and lift quarantine measures earlier than expected. So that could give LATAM an upside from the inside. And then there's other upside scenario where the US and Europe, they ramp up healthcare control measures to contain the virus, they ramp up stimulus measures, so they can actually also lift quarantine measures and social distancing measures earlier than expected. Again, it's not the base case, but it could also happen. And what that does, again, is to yield different growth patterns for LATAM. And I think it's going to be easier to look at this, through our growth rates. So in the base case, again, we see a contraction in 2020. You see a rebound in 2021 that will make up for the losses in 2020, but that will put us in a lower growth trajectory. The difference with our upside, where you see a hammer in LATAM or early containment in LATAM, is that because you're doing a hammer, growth actually contracts more in 2020, right? You're just making social distancing measures more stringent, but that allows for a quicker recovery, quicker containment, so you see a quicker rebound in 2021. And then on the other front, if you see Europe and the US recovering faster than expected, what you see is pressures on LATAM's exports, tourism, remittances easing. So we have lower contraction in 2020 and still a higher rebound in 2021, higher than the base case, but not as high as if we were to see swift containment in LATAM. So this is at least how we're thinking about the scenarios. What I think will happen over the next few weeks is that we're gonna get answers for the two axes, right? So we will know whether we're in late containment, early internal, or early external containment. And then we'll have to zoom in to consider other variables that we are more likely to be domestic in nature, right? So what type of stimulus measures can you see in LATAM? How can those evolve? The same in Europe and China. And then I also wanted to leave you with our FX view for LATAM. You know that currencies have reached new highs, unfortunately, for companies importing into the region. And if you look at our average forecast for 2020, we're expecting currencies to stabilize a little bit from where they are today. However, if you look at this, we've revised most of them to account for weaker than expected currencies. So not, right now, just to give you an example of the real, we have it on average at 4.8, Mexican peso 20.50, the Colombian peso 3,800, same for the Chilean peso. So we just gonna have to get used to this, because with the level of uncertainty that we're seeing, this is unlikely to change. And remember that the US dollar is the currency of reserve. Many investors, or most investors, think about the dollar as they think about gold, right? It's a safe asset. So currencies will remain weak for the time being, and also in 2021. But to answer your question, Brenda, you had a question about how different countries might react or be exposed differently to COVID-19. And I think the two factors that will be very different across countries will be, first, the stimulus measures, also the containment measures, although these are likely to change. And I don't think Brazil and Mexico will be able to sustain what they're doing for much longer. But then domestic factors, as I told you, are going to get impacted, and different countries are in different situations right now. So just to bring a few examples to you, if you think about Brazil, the tax reform will probably get delayed because of COVID-19. If you look at Mexico, this is a very special basket case, because we don't expect any upside from AMLO correcting course and implementing quarantine in Mexico. And the reason why we don't see upside from this is because even if he does this, the likelihood that he does not launch an aggressive stimulus plan, fiscal plan, is very high, right? So you could get in the worst possible scenario in which you're reacting too late, you're locking down your country, and you're not protecting the liquidity of businesses and people, leading to massive bankruptcies in Mexico. So at some point, for Mexico, the late containment might be better than correcting course or changing course in a month from today. In Colombia, something very particular to Colombia, just as an example, is migration pressures deepen from Venezuela. You know that the outbreak is also in Venezuela, and as you can imagine, the healthcare capacity of Venezuela is just not there. So even though borders are closed, those pressures will continue. In Argentina, now we've moved from possibly Argentina avoiding a default. Now we're assuming that Argentina will default on its debt on every single scenario. And in Chile, it's going to be more about the constitutional vote. As I said, you're likely to see social unrest appeasing as the quarantine lasts. Protests will probably come back in Q3 and Q4. And the constitutional vote that was slated for April was already pushed to October. And then in Peru, as I said, they have the highest fiscal capacity together with Chile in most countries. Vizcarra's approval rating is the highest across Latin American presidents, and he was also very bold and the first country in Latin America to react. So I would assume that his approval ratings are still very high, which might allow not only for Peru to escape from this quicker than other countries, but also even be able to implement or move forward with some of the anti-corruption agenda reforms that we had in place. So this is all I wanted to share with clients today in terms of our economic outlook, Brenda.
Thank you so much, Pablo. I think what would be interesting from my perspective, I really like to end this webinar on a more optimistic, let's say, note. So I was wondering if you can help us understand if there's any long-term opportunities that could stem from this crisis.
Sure. So you're definitely right, Brenda. And although the outlook for 2020 is not rosy at all, I hope that clients will remember that there's going to be a rebound, and after the crisis, there's going to be opportunities, right? And I think what's happening right now is that most countries are having to adapt to a remote scenario to manage their business. They're making investments to go online. So I think one of the first things that you're going to see is something that happened actually during the SARS crisis in China, where e-commerce had not really picked up, but after SARS, it saw a massive boost, right? And if you think about what companies are trying to do right now, right? So trying to push products to their e-commerce platforms, or even doing e-commerce for the first time, rendering services online, doing teleworking, doing meetings online, delivering services online, bringing everybody together, customers together, your employees together through online communities. I think people are gonna get used to these things, and all of them bring significant cost savings for companies. And as you get people used to these things, they might even see a lot of value. Not only customers, but businesses, as they can track, they can be much more targeted in their strategy in a digital world, right? So I'm just talking about, digital transformation right now. If you read other articles, you're gonna see more philosophical questions as to whether restaurants are going to have to, put more distance between tables, where people will continue to shake hands, the geopolitical order, right? Whether China will emerge as a reference relative to the US in containing the virus and those type of things. So I'm not talking about the geopolitical or behavioral factors, but really just looking at some of the business factors here. But I think it's going to be fascinating to monitor how these things will evolve. So before we get into Q&A, I just wanted to show you how e-commerce was in 2018. And you see here, most of our clients were in market entry, some in rapid growth. In many countries, there was no e-commerce. So just expect this to take off. But I wanted to close the conference right now, the webinar, and we're definitely going to be extending the call for 5 more minutes for Q&A, or 10 more minutes for Q&A for those who can stay. But I wanted to ask you, to what extent do you think COVID-19 will provoke lasting changes to how companies run their business? Do you think it's going to be significant? Yes, but only to some extent, or do you think that things will go back to normal, so back to how we were running our businesses in January? Okay, so I think there's alignment here that there's going to be changes, lasting changes. And if I remember the answer to one of the first questions as to whether you had task groups thinking about the post-COVID-19 world, I think it's going to be very important that we put aside some time to think about the future. How will 2021 look like, even Q4 look like, and tap into these opportunities. So with this, Brenda, I think we can open it up for Q&A.
Yeah, absolutely. Thank you so much, and everyone that was able to join the webinar today. So if you have any questions, please send them to the GoToMeeting messenger. You can click on the Q&A box on the right-hand side of your screen. We will make our best attempt to answer all the questions. I see many coming in. And if not, we will send you our responses via email over the next 24 hours. So perhaps, Pablo, do you want to to pick one of these?
Sure. So have a question here: which markets are most resilient now, and which ones are expected to have the fastest return to growth after the crisis? So I think we've already looked at that. Give me 1 second. I think we already looked at that when we looked at the country outlooks here. But if you look at Chile, you see higher rebounds. Well, Chile is not a good example, but let's see. Peru is going to rebound much more strongly than, say, Mexico here. And this is a good example because I think the two differences between Mexico and Peru, or there's many differences, right? But Peru is being bolder at containing the virus. They also have more money to sustain social quarantines. And the domestic scenario or reality is much more stable than in Mexico. And we need to remember that AMLO was already not necessarily in free fall in terms of his own credibility or popularity, but uncertainty in Mexico was already very high before the crisis. So again, I think it depends on the fiscal stimulus capacity that you have, how quickly you contain the virus, and how were you before the crisis. Those are the three things that I would look at. There's another question here about how do we see vertical lockdown theory that is popping up. So in other words, quarantine for the risky groups only, aiming not to hit economy that's strong, looks to me more of a money first theory versus a scientific based one. I've seen this one. I think if countries could isolate the population at risk effectively, it sounds like a better alternative. But we need to think about for how long we'll have to live with this virus, right? And something that I haven't mentioned yet is that South America will get into fall when Europe and the US will get into the spring, and something very, very obvious, right? But the outbreak is gonna get worse in Latin America. And if you wanna protect risky population groups, certainly the elderly, you need to maintain them in isolation for like a year. So I think to be able to implement this in an effective way, and assuming that nobody will want to see grandma or grandpa for a year, and nobody will take care of them, and that will not have human contact, I think it's just hard that this could happen or be done in an effective way. There's also a question about whether the forecasts that we're showing here are already on the platform. They should be. We put oral new numbers yesterday morning. So at least for LATAM, all the numbers that you see here on this deck, at least for the base case, should be already in the platform. Okay, more questions here. How does LATAM government lack know-how or mobilization in order to implement Asia measures? Info has been quite accessible of measures taken in Asia. They might have the information as to what Asia is doing, but they might lack the resources to do the same thing, or the technology, for instance, to do proper tracing of people. They might lack the resources to put people in quarantine, even people who don't show symptoms, which is something that Asia is doing. And then the other thing that LATAM doesn't have in relation to Southeast Asia is number of beds, number of ventilators, etc., right? So they're not just, they're less ready from that standpoint. Let's see what else do we have here. So there's a question about quarterly growth. So how do you foresee US lack of early containment actions will further impact LATAM? So how will the US impact LATAM? I think we're already assuming that the US will do late containment. We're not assuming early containment in the US, right? So that's already in our base case forecast as it pertains to exports to the US, remittances from the US, tourism from the US, especially in Mexico, Central America, and the Caribbean. And in terms of the quarterly growth pattern, we're gonna be working on those numbers over the next few weeks, hopefully, but as I was talking at the beginning of the presentation, I think a good guideline as to how LATAM might evolve over the next few quarters is by looking at our forecast, our quarterly growth forecast for the US, and these are quarter-on-quarter forecasts, where you should see a very massive drop in Q2, rebound in 2020 that doesn't make up for the losses in Q2, and then ongoing growth in Q4, and so on. But if you look at this chart, I'm also saying that LATAM will settle into a lower growth trajectory, right? So we're not going to go back to the previous economic growth trajectory that we had prior to COVID-19 because of the structural damage to the economy.
Great. Thank you so much, Pablo, for today's webinar. I think that concludes our time today. I wonder if you have any final remarks.
No, I would say I know that this was a lot of information to digest. I know that you're all going through firefighting, trying to protect your business, trying to protect your people. I think this will bring us, all of us together. And I think we need to remain optimistic that although there's some fundamental drivers or weaknesses that could come to the surface over the next year or two, this is different from the 2019 crisis, in which there were very severe macroeconomic imbalances under the surface that nobody saw coming. So I want to be optimistic and think that the world will recover from this already in 2020 and ongoing growth in 2021. But I guess our LATAM clients will agree with me that doing business in LATAM has never been easy. This is just one more curveball that we're getting, right? So I think we can all go through this and emerge stronger in 2021. So that would be my final comment, Brenda.
Thank you, Pablo. And the same to our clients. We hope your family and friends and colleagues stay healthy. And if there's anything that we can do to support, please contact us.
Perfect. Thank you very much, Brenda.
Thank you, Pablo.
Bye-bye.